Futures are a bit soft as earnings season gets rolling. Ben Bernanke reiterated current Fed policy yesterday at the University of Michigan, but stated that the debt ceiling debate must be addressed quickly to avoid threatening the already slowed economy. Will Apple hold the 500 level? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. Futures are down about 4 to 6 handles this morning. And as we get into earnings season, I think the big question right now, Scott, is what levels do we need to hold on to momentum?
Well, it all depends on what type of investor you are. Are you an active trader? Are you an intermediate trend trader? Are you a macro investor? Because right now, I think we've all been a little bit spoiled. You know, I personally like to be involved when we're following the 8/21-day moving average. It makes it easier to hold on to a portfolio approach. If you look at the chart here, what we've seen so far this year, or even take a step further back, this was that June low. And remember when momentum started to come in, we rode this 8/21-day moving average all the way to the highs here. Then once we broke that level and closed below it, that's when we corrected. So far this year, if you look where we're at, this was the November 16th low. Here's your gap up. And then we literally followed the 8/21-day until the whole fiscal cliff disaster. And then you come into this year, this was New Year's Eve. You had your gap up, consolidated, let the 8-day catch up. We then paused in front of the prior high, which typically happens, right? 148.11 supposed to be big resistance. So on this open, I would say it would make it easier for me and some others to hold right around 146 in between the 8-day. But we could come back down and test the 21-day, which comes in right around 145. I don't think that happens today. But I do think, though, you can't rule that out and then still be okay to potentially take this out at some time down the road if earnings prove that, the market warrants it.
Well, and speaking of earnings, we do have a lot of earnings coming out this week, largely dominated by banks, but also large cap tech and industrials are reporting this week. What are you focusing on?
Well, tomorrow we have JP Morgan and Goldman. Banks have been great since the summer, helped lead the way. We had Wells Fargo last week. It was a decent report, not enough to ignite the group, but it also let them digest some of the recent gains. If you just quickly put up the chart of the XLF, it's still hanging out above all this major. This was the prior high, so it's above it. It's right at the 8-day. So, you could draw a little bit of a trend line here, whereas if we went below the 1696, we could test the 21-day moving average, which we did test a few times during the course of this run, and we still trended. So at this point, if they're a little disappointing, we could see that, and then you just have to stay with it. So at this point, being like a tier one in the financials that you like, or if you don't, hey Brittany, a lot of people don't like taking the risk into earnings, and I understand. If you're a macro investor, you have to. If you're an intermediate trend trader, you could lighten up into earnings season, then trade after the report comes out. That's what most of my guys do. So it all depends where you live.
Now, what do you attribute the weakness in the market we're seeing largely to? Do you think Ben Bernanke's statements yesterday have any cause in relation to it?
His 4 o'clock little statements. I think it's maybe some of the morning weakness, because he did say that he would like to see the debt ceiling raised without any strings attached. To me, that's a pretty bold statement, and I think that we'll probably get through it, but there needs to be a compromise. We already supposedly raised revenues, and now I think we need to cut some of our spending and also to get that equilibrium. So hopefully they'll both compromise so we don't go to the last minute or the last second of the final, the threshold of all pain, right, or no coming back. And the last thing we want is IOUs, like I think they did in California for a brief period of time. So all in all, let's just hope that they do it pretty timely so the market doesn't have to deal with it.
All right. Well, there's been a lot of action lately in mega cap tech. Let's start with Dell, who, of course, made headlines yesterday with talks that it may go private. The stock rallied 13% upon those reports. Scott, what do you think the possibility is that Dell will actually go private?
I think you could say above 50%. And I think the market action in it is anticipating that it's not just one of those rumors that we see floated around all the time, because you did see it get halted and then it actually, continued higher. And if you look this morning, it's also up a little bit. So there might be something behind it. If you look at the chart here, Dell, you will see that, first of all, in the past year or two, it's been so battered and bruised. It was, last year, right around this time, it was at $18. Okay, and then it's just been crushed. Remember this big gap right here, which never got filled, led to lower prices. And then fast forward to, there's always a time and a place for things. I know in off the charts, I know Mark's been really focusing on it. Once it, crossed above this descending channel after the move off the lows, it became a decent trade so far this year. So above this like 1060 was a trade, and then it consolidated, let the 8-day catch up, and then I know some guys were looking just for a trade above 1133, not knowing that was going to happen, and they got pleasantly surprised. So at this point, yesterday's high is 1283. If we get above that, there's a big gap at some point, that could get filled. So I would say right now, I wouldn't chase it and just initiate a trade. If you're in it from this area, maybe stay in a third, because I think you could be pleasantly surprised if a takeover does happen. Probably is in the 15 to 17 range. I wouldn't just blindly short it thinking there's no way it happens.
Right. Well, Hewlett-Packard has also had a great run to the upside. It's reclaimed most key moving averages. What do you think of it here, because it's meeting some resistance?
I would think it's more of a cute short versus a buy Hewlett-Packard here. It also had a move. I know yesterday once the news came out on Dell, I'm like, maybe Hewlett-Packard gets an extra move, and it didn't really work. So I went long Dell and I went short Hewlett, thinking that if there was nothing to this, this would probably mark the end of the Hewlett-Packard move. And if you look at the chart here, you will see that here is the low that took place in November. This is when it crossed this mini downtrend, so this would have been a nice situation to get back involved there. Then you had the gap. From my swing trading course, if you have a gap and it doesn't get filled, that was a decent entry, and now it's stretched up into prior resistance. So at this point, there are a lot of people trapped in this Hewlett-Packard that could use a way out. If you remember when it broke this area way back when in September, it's right there. You could see a little bit more move, of a move. Sometimes they love to test the 200-day, but I don't think if you haven't been in Hewlett-Packard, to be buying it at 17 for this little spot, I think that you're somewhat chasing it. I don't think there's that much upside.
Well, Cisco has been acting really well. The stock had a nice move yesterday, gapped up above its intermediate resistance. So will you have your eyes on that gap now?
I think at this point, guys that are still in it, there was much better entries, and now it's been getting upgraded. I think you stay with it. It's been, remember last year, the first 2 quarters was horrendous, and then it changed its composure. And that's what you want to look at with these mega cap stocks. You want to see them change their composure. And if you look at Cisco, take a look here, you will see, first half of last year, it couldn't really find a friend. Look how it was all the way down in the dumpster. Okay, and then it did it again. All right, but then it started trading better. Okay, what happened here is, let me show you technically. Here's where it made this low. It gapped up. So that was a nice gap up. I do think that might have been earnings. And then from there it held. So there was your entry. Okay, you had a nice entry, and from there it's been following the 8-day. I talk about the 8 and the 21-day held all the way to where it is now. So at this point, it's going to have to really deliver, to be honest, on earnings. As you come into big resistance here, there's probably going to be a lot priced in. So I would say, sell some into this. Here's your next resistance area, which is around 21.24. And then I do think if it stays this way, there's this possibility you could see 24 this year. But from 21 to 24, not that much meat left on the bone here. So sell some, don't initiate here. And if you're going to take it into earnings, I would have some kind of collar on, where if you want to stay long it, sell some calls, buy some puts, so this way you have some insurance just in case it's not what the street wants.
Well, Oracle is also acting really well right now, basing nicely above its 8-day after clearing some key resistance levels. Could now be a good time to add?
This one, it depends how quick it is, because this is also one of the ones that have paid investors that are actually sitting in it. It's one of the mega caps that give a little bit of a dividend, and there hasn't been that many hiccups in the past year or so, like you had in a Microsoft or you had in Intel or somewhat. But if you look here at Oracle, you'll see it's above all the key moving averages. It's almost at last year's highs already. There were some spots I would have rather have seen you buy it, like just say when it broke this downtrend right here, or when it came back and retested where it previously broke out from last year and held. You take a closer look here. It is still acting well. It goes up with the market. It's following the 8-day. There's no reason to short it. But I think that if you were staying with it, I would just at this point be in like a tier 1 also, because we are approaching the old highs. And whenever you have a stock like this near old highs and coming near earnings, there's a lot that's going to be expected for this company to report and guide with.
Well, coming up, we're going to go in the trenches with tech stocks that aren't acting well just yet. But first, a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and talking tech stocks that aren't acting well just yet, and Microsoft is a prime example. The stock has not been acting well. It is trading in a lower level range, and 2630, Scott, has been acting as a strong support. So could this be a good spot to add a little bit?
I think if you're like a fundamental guy that's not looking for anything technical, maybe small, but ultimately out of the mega cap names, this one's been the worst. This one came all the way back in. It hasn't even had any kind of January effect type bounce. So it's been off the radar, but this does, it changes at not say at a drop of a dime because it's Microsoft, but it's something to watch, especially if these mega caps continue to act well and perhaps we look for some type of reversal. If you look here at the chart of Microsoft, you'll see where it is. Look where it is compared to last year. Last year at this time, remember we had that really nice trade. I think it was on Bloomberg. I called it frisky, and it went from 26. This was when everything was very optimistic about mobiles, mobile aid and whatnot. You had the big move up, and from there you've had really a series of lower highs, and it's just been under pressure. So fast forward, also look where the 200-day is. Look where resistance is. So it's going to have a lot to do. So on a micro little pattern here, if you wanted to be long some, here, okay, not a bad idea versus level. And for it to actually look a little bit better technically, it's going to have to clear this 2773. And then once it gets above that, then you have all these moving averages in front of it. This is the type of name, though, where the market's not going to be expecting much, okay? It's pretty much on the lows of the year. The report's they're not going to look for anything so substantial. So if there's something a little positive, maybe that'll be some kind of igniting type move where we have a gap and we can trade it versus a gap. And the lower it goes, the more people are going to talk about it being just like a full-fledged fundamental story, all the cash that it has, blah, blah, blah. And then at that point, technically, we'll probably see something that adds up. But for right now, it's either in a void. I don't think it's really a short, but I just think it's, off the beaten path until it changes its composure.
Well, Intel also had trouble holding on to recent gains yesterday. The stock has looked pretty weak. What are the levels to watch, and especially before earnings on Thursday night?
Well, this one also, the market's not expecting much. They generate a lot of cash. They missed the whole mobile type of phenomenon. So the street right now is a little sour on them. But this one actually had a nice move or a little bit of a move off the lows. And I've actually been long it as one of my swing trades. It's been working, not a barn burner. But if you look at the chart here, you'll see, at least this had, a downtrend that it broke above. Retested it, then you had a little bit of a gap here. I talk about gaps as entries because it shows some power. So if you look at this little gap here in Intel, it did not fill this gap. So that showed you there was a little bit of buying pressure behind it. So that's how you get involved in a laggard play with a plan. So I got involved a little bit in here, and it's been slowly going higher. So at this point, you have big resistance up at 2308. I'm not sure if I'm going to take it into earnings, but I do think that earnings could be more of a catalyst versus something that's going to take it back to the lows, but we shall see. It all depends on what the composure of the market is and if people are looking for some place to put some money behind. And right now, Intel has a decent yield. It generates a lot of cash, and it might be something to look at a little bit closer. We'll look at that on Thursday.
All right. And AMD has been slowly crawling up since last November, but it has a long way to go before it's back at the levels it was at last April. What level do you think it needs to clear to maybe get a little more momentum?
This is like one of those treasures for trash trade, meaning that if it's not in your trash bin from the lows in January, you could see some type of nice percentage gains. And I think AMD truly is in business just to keep the antitrust away from Intel. But anyway, at this point, you look at the chart here, to talk about AMD, it's pretty funny. But it's not that funny if you're someone who initiated on this little gap up and stayed with it as long as it held. And it's had a percentage-wise decent move. At this point, 278 is an area that maybe it gets above. And then again, a lot of these laggard stocks are well below the 200-day. But if the market needs things to gravitate towards, some of these old school names have been moving up. Like just say, look at Nokia, for instance. Just names left for dead. In this lower range, like this was below 2, now it's at 460. There's some percentage gains there. So for AMD, I wouldn't be all in or make it your focus as your number one trader. But if you have a portfolio approach, maybe you stay along a little bit of this as long as it keeps trending higher and holds the 8 and 21 day. And then who knows, maybe sometime some company makes a bid for it for something, and then you get a little bang for the buck. All
right, time for some quick hits here. Apple fell to its lowest levels in 11 months after reports that production of the iPhone was cut on weak demand. The stock tried to rally, still closed at lows. What do you make of Apple right now?
I think guys are approaching it day by day. You know, in the overall scheme of things, it's still in a pretty big downtrend. You know, you have this line that's been like a brick wall. It battered investors' psyche from 700 down to 500, gave us a few different trades, decent bounces along the way, but really it's been a short. And if you look at the chart here right now, you will see, you know, here's that topping pattern right there, you know, at around 700. This is when one trend line broke when it closed below the 21-day. Here's when another trend line broke when it closed below 620. And then, you know, you had your decent bounce back to the trend line. Then it held. Another small bounce in the beginning of the year, just got sold, and look where we are now. So short term, this is the way I'm going to trade it. You know, I'm going to look at 507.50. If it shows relative strength and can get above there, maybe I'll do a cash flow trade to see if it wants to retest 515. If, you know, it shows relative weakness and it can't rally like it hasn't been able to, and it trades below 498.50, perhaps some guys will try and short it with that as the pivot. And then underneath that, you know, your next real level in Apple really doesn't come into play until about 486. Okay, and then you have macro support at 440. So at this point, still in a nasty downtrend, and until it closes above that with some kind of authority, probably will take earnings for that to happen. You know, just continue to take the trade day by day and try and remove the name Apple, because if you're just sitting through this mess because you think it's Apple, you know, you might be in for a little bit of a harsher awakening than you thought.
All right, and Dang has been acting better, but do you think it has enough power to break through next resistance?
This is one of those treasures for trash trade too, where it's acting a little bit better. You get it off the lows. Like 3 times a year, this has some kind of move, and some of the Chinese names got some attention. And this one yesterday traded above average volume. It broke above 470. You look at the chart here, you will see, you know, just started to break above a level. You know, if it gets a little bit of attention or action, maybe it gets up to the 200-day, 553. You know, last year it was able to have a really nice run from, you know, the $4 level almost to 11. You know, I'm not saying it's going to happen again, but, you know, there is some room where it could just be something to do for a move to 550. So I would say as long as it stays above, just say 450-ish, you know, I'll stay with it. And, you know, maybe it gets some volume and gets some expansion into that area.
And GE building a base above its key moving averages. Where might you add here?
This one, you know, when the market was looking to break above 1474, I'm like, what hasn't gone yet? And financials were really strong and industrials were in play, and I'm like, maybe GE, but GE is still lagging the market. I'm long some. I think in order for it to get any better, I'm hoping that it breaks out before earnings on Friday, because on Friday, I'm most likely not going to have what I have now, or I might not have anything at all. You look at the chart here, you will see, you know, it is getting a little tight. I like tight patterns. So right now, support-wise, here you go. If it were to break below this 2090, I'll probably just get out of it, because I don't need to be married to GE. But if you look at this downtrend here, you know, it's pretty significant. You know, if it could start getting above 2125, perhaps you add a little bit, and then really if it starts closing above this downtrend with some kind of volume and authority, you know, it could open the door for a nice move back to these highs here. I think they gave conservative guidance last quarter, so it's something to watch. Hopefully they do a little bit of a move before earnings. If they don't, you know, then I'll wait to see how it gaps up on earnings, if it's going to gap up, and then trade versus that gap.
And finally, JetBlue is flagging in front of a major resistance around 6-ish. Do you expect to see momentum coming in above this level?
It's nice and tight, and the airlines have been on the move, so to speak, or flying. Anyway, this one has a nice little pattern here, so we'll take a look. You know, it did have a nice move, which I think was a better entry right around here. Broke this small little downtrend, came back, retested, and now it's tight again. So if the airlines want to go, and this, you know, stays in play, here you go. This was a nice tight pattern, and it's got to get above 6 to continue. If you look on a more macro sense to see where the next resistance is, once it gets above 6, really the next thing, you know, or the next spot in the way is 650. And I know as far as airlines, this is the airline that I like to fly. You know, the TVs, the DirecTV, the Comfort. It's something, and now they're almost they're in a lot more airports than they were. So, you know, combine the Buffett effect of the enjoyment of the product and the chart, perhaps there's more upside here.
All right, well, with a lot on the calendar, especially this week, where's your focus heading into trading today?
It's going to be, you know, how we handle this down open. Do we, you know, go positive today, which would be very bullish? Do we hold the 8-day, which we're a little bit below? Or do we make it all the way down to the 21-day to shake things up a bit? Because if we do go to the 21-day or around there, there will be some guys getting stopped out of some positions. And I think if we do get down there, I'm going to take off my hedges and cover it and then see what goes on there. I think the bank's going to be really important tomorrow with Goldman and JP Morgan. The rotation has been somewhat healthy, and I think on a macro sense, the market's still acting very well. We have a few things to deal with, I think, overall this year. Having a portfolio approach, but being able to use a managed tier system based on the composure or condition of the market is going to be key. And right now we're still in this uptrend. We're coming up to a little headwinds, but I think that you have to try and stay with things. And if they start to change, we'll change. And we did that 3 times last year, and it wound up working out pretty well.
All right. Well, everyone have a great Tuesday. Happy trading.